everybody is expecting is probably playing out, but it was priced in last year. Right, the markets don't go down 75% in crypto without it pricing in the economic cycle. The equity markets fell 30, 35%. Long end of tech fell 70%. So we had it priced in last year. So then the market starts pricing in.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal says, the argument, my long-standing thesis, which stated that everyone is likely expecting a recession, is paying out, but the prices were reasonable last year. The markets didn't decline by 75%. Crypto absent it. When you consider the long end of technology, which plummeted to 70, the equity markets sank 30 to 35 during the economic cycle. So we priced it in last year, after which the market begins to price it. What's more, liquidity began to increase in June of last year, and that's when I began increasing my ETH wagers in anticipation of the significant ETH sell-off, during which ETH made its low. Then October proved to be another, liquidity, which validated my predictions. Scenario, when the markets were experiencing their final spasm while liquidity was rising. So once more, I kind of added to that technological names along with them and continued to add throughout. So for me in the future, as you can see, I live in the future and use the portions that I've been waiting for you to see. Forward-looking indicators, meaning they're anticipating things and analyzing economic data beforehand a peek into the future. But once data finally catches up, inflation is reduction in unemployment is gradual. Growing the economy is becoming less rapid. And lots of things Raoul Pal discuss, so please watch the video to end and share. Subscribe our channel, Everyday Finance. Thanks.
So my thesis has not changed for a while, which was that the recession everybody is expecting is probably playing out, but it was priced in last year. Right, the markets don't go down 75% in crypto without it pricing in the economic cycle. The equity markets fell 30, 35%. Long end of tech fell 70%. So we had it priced in last year. So then the market starts pricing in what? So liquidity started picking up in June of last year, and that's when I started adding to my ETH bets into that big sell-off in ETH, where ETH made its low. Then the confirmation of my forward-looking indicators was that October was another liquidity event where liquidity was rising, but the markets was having its last spasm. So again, I kind of added into that bet, added technology names as well, and was adding all the way through. So for me, looking forwards, we're now getting the bits that I've been waiting for. You see, I live in the future. I'm used forward-looking indicators. So they're looking at things in advance, the economic data in advance, kind of a glimpse into the future. But now that data's catching up, which is inflation is going down. Unemployment is slowly rising. The economy is slowing down. And that means the Fed soon stop raising rates. It means that eventually they cut rates, and eventually maybe they use quantitative easing. We're also going into an election year. An election year tends to have stimulus because they want to get elected, so they bribe everybody with money. So we've got this kind of nexus of stimulus that's likely to come between the back end of this year, 2024, 2025. I've been working on something called the Everything Code as well, which I think I've spoken to the Banter audience about as well. And that's basically the idea that what the central banks are doing with quantitative easing is printing money to pay the interest on the debt from the previous kind of debt cycle. So every 3.5 years, same as the Bitcoin halving cycle, is this economic cycle driven by government debts and how they roll them every kind of 3.5 years, because they're all 3 to 5 year debts. We're about to come into the period where they have to monetize the pandemic payments, and they were massive. And they can't do it with interest rates where they are now. So what they're hoping is that they can get inflation to undershoot. They are not stupid, the central banks. They obviously know the forward-looking indicators are falling on everything. but they want an inflation undershoot because they need to be able to cut rates low enough that they can refi the debt and then put it onto the balance sheet. So that means, in layman's terms, starting from the back end of this year, the last quarter, let's call it kind of November, December period, there's going to be more cowbell. And cowbell is my kind of tagline for stimulus. That's whether it's the printing of money starts, or that starts then, or cutting of rates, because they need to be able to service the debt. There's $13 trillion of debts that come up for renewal, plus the new debt that they're issuing. So it's an enormous amount for the markets to digest, and the only way of doing it is this.
And
so that makes me
they can't really refi. I mean, it would be crazy for them to start refinancing at rates that are the highest that they've ever been, and maybe even getting higher.
So exactly, because it just means that they have to issue more debt just to pay the interest. Now, what they have been doing, they have been issuing some of this debt, but they've been doing it like 3-month bills because they don't want to commit themselves to having to pay bloody 5% interest for 5 years. What they want to do is keep it the short term, let the economy collapse or let inflation collapse, cut rates, then they'll roll all the debt out 5 years, between 3, 4, and 5 years. So that's the game in town. They're all doing it, all the central banks. Yeah, so inflation is a measure against what happened the previous year. So if there was some outsized moves this time the previous year, you tend to get these squiggles as it is. The trend in inflation is lower because commodities have generally been lower over time. That was the first thing to move. But then you start getting the more stickier components, rents, wages, all of that is coming down. And that stuff keeps going. So the front end of falling interest rates is still to be baked into the cake, and that will be headline inflation should get below 2%, maybe even 0 by the end of this year. Which is like, if I can see that in my data, surely the Fed can too, which adds to that argument that the Fed know that they're trying to undershoot on inflation on purpose.
So I think, it's super encouraging that we saw rentals coming down. Rentals was one of the stickiest components of inflation shelter.
Those lag between 8 and 15 months. So this stuff is going to keep falling because of how the calculations are well into 2024 and into 2025. Again, my calculations put core inflation at 0 or negative next summer.
Wow.
Maybe I'm a bit early, but by this time next year, core inflation is going to be at 0. It's kind of baked in the mathematical cake. So that's how I see it. So just over time, these numbers will keep coming lower. Now, if we look at the trueflation numbers, they've been bouncing around. They hit like 2.2% or 2.1%. Now they're at 2.75, 2.72, something like that. That's this comparison to what happened the previous year, what commodity markets did. But again, over time, the stickier components will just keep falling. And that mechanism of these slow things like rents and wages, they take a long time to deflate, which is why central banks tend to cut well after recession. They tend to be cutting for like 18 months after a recession because they're fighting this inflation thing, deflation thing. I think we're done. I think by November, inflation is going to be 2% or less.
Wow.
I think that they have no chance of continuing. So no, I think the data that's been coming out, as you've been pointing out, is very much telling the Fed that they're not going to do any more. And if that continues, which I strongly think it does, then that's game over. And in fact, we're going to be looking at rate cuts. Now, the thing that will accelerate rate cuts is the banks. If those regional banks start running into any banana skins and slipping up, then the game gets really interesting, because then they have to stop QT, they have to start rescuing banks, and then the real game is on.